Investments, as I told you, I don't just keep my premium, I invest it, right? So my investment income um, has few components. I invest in bonds. I invest, well, you can potentially invest in many assets. It is driven by what is called a strategic asset allocation. There is an asset allocation mix that is approved by the board. There are certain regulatory requirements in each country. Many regulators do not allow you to invest beyond a certain percentage in higher risk assets like equity, etc. Some regulators don't allow you to invest in private equity or REITs or cryptos for sure. um, some regulators allow you to risk with a certain small portion. So it depends. In the different jurisdictions, the rules vary. Um, so in our case, we only have exposure to money market, bond, and equity. And equity is only 2% today. So our investment income has two lines: realized gains and losses, and fair value gains and losses, or unrealized gains and losses. Fair value gains can also be called unrealized. Today, our investment is approximately 700 million, 683 million to be precise. If you look at our investment income, as you see, we with the equity, bond, and the money market, we make interest and we get dividends, right? Now that's the investment income. But there's actually also realized gains. Realized gains are basically that already have been sold and converted into cash. We've actually realized the benefits. Now, this is where it gets tricky because it's accounting mumbo jumbo. I'm from a finance background, so I can blame myself for it, for being part of that community. There is a huge portion of unrealized. Unrealized is basically when the investments move up and down based on the current market value. Accordingly, we have to book in every month and unrealized. It is not realized. It doesn't mean I have sold at a lower market value. I haven't, but I still have to show the lower market value. Similarly, if the market value goes up, I still have to show a unrealized market value gain, even though again I haven't sold and actually made the gain. So there is an unrealized portion which many call paper gains or paper losses, which means I haven't realized it. But if I were to realize it today, this is the profit that it would make, or this is the loss it would make. So, in simple terms, right? The same thing if I were to explain. If our stock investment value were to increase by 20%, say from 10 million to 12 million, if we sold the investment, I make 2 million as my realized gain, subject to each regulatory and market landscape, their tax considerations, but let's leave that aside for a minute. If we retain the investment in our books and we don't sell it, it's a 2 million realized gain. Okay, unrealized gain. Sorry. So I haven't realized it as yet. So the other element is, we do have associates. So we have 49% in our Thailand business. We have 49% in our EMEA business. They are called JVs or associates. Here, we only consolidate them at the bottom line level. Do you know today your top line of the group does not include these two companies? um, because they are associates. They go through the bottom line of the company. So what that means is their profit or loss goes through to the bottom line of the company for the portion which we own. So if they make 100 ringgit profit, I take 49% of it. If they make 100 ringgit loss, I take 49%